Hi traders, my name is Michael and welcome to another educational video where I cover technical analysis and chart related topics. Today's video is about the average directional index indicator. It is a bit complicated to use, the formula for calculating the index is hard to understand. It doesn't give quite clear signals where to enter the market, yet it is often included in trading systems as a signal confirmation, so let's check what it is, how to use it on the real market and find those signals. But first, a few words about the history. It is the year 1978 and Mr. J. Wallace Wilder in his book New Concepts in Technical Trading Systems described the system that included indicators which were measuring the direction and strength of the price movement. Main indicator among them was ADX. Up until today it was many times refined by the analysts and the final version is what we have available today. Index measures the strength regardless of its direction with the same value. The measurement is from 0 to 100. It suits any type of asset. It can be used with a currency pair, stock or even commodities. It is presented by the one solid ADX line and two dashed lines plus DI and minus DI. Recommended time frame is H1 and higher. On lower time frames it will produce many false signals because of the price noise, as well as during the flat market. So, now let's analyze how to use the ADX. So when the main line exits that 0 to 20 zone, it signifies the beginning of a trend. When the indicator line reaches the 50 to 60, it is a signal that the trend is probably ending. It gives most accurate signals after the consolidation. When there are many sharp moves on the market and rapid changes of the trend direction, then you must be very careful because it will produce many false signals then. So, the calculation is a bit complex, but I'll try to show you in a very quick and easy way which will help you to better read the signals that it gives. So, this is the ADX pattern, which is this solid line. Plus and minus directional indicator are the dashed lines which are calculated by this pattern. So, those exponential moving averages are calculated from directional movement, which are basically current and previous highs divided by the true range. The EMA is the number of candles which you can set in the settings. So, when determining the strength of the trend, we should focus on range values. So 0 to 20, it's not a trend at all. It's a flat movement, there are more or less equal buyers and sellers at this period. 20 to 30, this is the beginning of a trend. Price breaks out of the resistance or support and starts to form a one-way trend. At this point we should look also for plus DI and minus DI, how positioned they are for each other, because it might be just a false breakout. 30 to 40%, this is the confirmation of the trend and the safest moment to place a trade. 40 to 50, it is a strong trend, gaining momentum, here you can add the position if there are no other opposite signals that the trend might turn back. And finally, 50 to 100, this is the red flag for your trade. This is the value where the trend is getting to its highest point and is more likely to end up soon. So, what you must do is to look for a good moment to exit the trade. As for the direction of the trend, the plus DI and minus DI indicates which way we should be looking at. When plus DI crosses minus DI and stays above, that means the uptrend is starting. If the opposite situation occurs, of course it means that the downtrend will begin. But to have the confirmation that the trend truly began, we need to see the divergence between those two lines. Of course, I had on mean when the plus DI crosses the minus DI from the bottom to the upside. That is then the uptrend, and when the minus DI crosses the plus DI the same way, from the bottom to the upside, then it is the signal that the downtrend is beginning. Okay guys, so let's now check the real example on the chart, right? Right here we have the Euro JPY currency pair. And yeah, I already added the indicator, but let's do it together. As always, click the indicators tab, search by name, but it's on the top side, on the top of the list, the ADX average directional index. Clicked on that and it is automatically added below the chart right here. On the gear tab, when you click on it, you have the settings and the 14, these are the default settings and these are the settings that Mr. J. Wallace Wilder was using and was advising to use. Right here we have the, the colors, you can change them if you want. The dashed lines, blue is 1 second. Yeah, blue is the plus DI, red is the minus DI, and ADX is this, you know, ocean blue color line. Okay, so let's start from the beginning. We said that the ADX needs to be above 20%, and one of the lines and the dashed lines need to be in divergence. So the first example we have right here. They were crossing each other back and forth, and right now the divergence started to spread. And right here we have the minus DI line crossed the plus DI line, but the ADX was below. Right here right here it crossed the 20%, 20 points barrier. It was on this candle. So that would be, and yeah, the dashed lines are still in the divergence. So that would be our entry point, this red candle, and the exit point would be around here, guys, but not necessarily. I will show you why. We were speaking about that when the ADX line is above 50%, 50 points, then we can consider the trend to be, you know, ending soon and looking for the place to entry. But look at this example. We have entry here, and the 40-ish% points would be here, and so this is the 180 pips of profit, guys, from this trade. So I guess any amount above 100 pips is a huge profit, huge amount. And in this particular example, when the ADX line would be entering the barrier of 40 points, 40%, that would be a moment to think about the exit, right? But let's not end at this point. The second signal that it gives is when the ADX line is still above 20%, 20 points barrier, and the plus DI or minus DI, the dashed line, are crossing each other again, and the ADX is still above the 20. So we have this example here. Yeah, we have two examples in one, we can say. So let's check it out, guys. We have here this 160, 180, 190, whatever, and on this candle we crossed the plus DI crossed the minus DI, so it would give us the signal that the trend is still strong but is changing the direction, and thus this should be our signal to exit. So even if we do at the top of this candle, it would be 120 pips. So either way, that was a good trade, good signal, and the crossing of those lines gives us the signal to enter the trade in the opposite direction, right? So if we could do it, yeah, in the opposite direction to the upside, we would have something like that, right? We entered here. The ADX is still above 20. And here it again reaches the 46 points, 46% zone, right? We could see that here it was the high. And the barrier 46, even then we have 209 pips. So guys, if I would see a 200 pips profit, I would be, cashing it and taking the cash with me home. So that would be, I would be even exiting somewhere around here. I would not wait for the ADX to reach 50. So yeah, guys, in this case we have two in one, the initial signal and the reversal signal. But as you can see, this is the H4 time frame. So those signals doesn't come that often. But yeah, if you analyze, if you monitor enough instruments at one time, I think you would be satisfied with the amount of the signals that it gives, even on this higher time frame. I know that because it works best on higher time frames, it will not be that exciting to use it, but you can also determine the good moment to put your scalping strategies into work. When there's a flat movement, the price moves between the strongest resistance and support, the DIs are constantly crossing each other back and forth, the main ADX line is below 20%, that is a good environment for some scalping. Well, that's all what you need to know about the ADX in the beginning. Put it on your charts and start to work with it. Of course, at first check it on a demo account before risking real money. So thank you and see you in the next video, traders. Take care.